You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to the Deep Dive, your shortcut to being genuinely well-informed. Today, we're cutting through the noise, sifting through the latest global developments, and really extracting those crucial nuggets of knowledge that truly matter to you.
Exactly. Get ready to connect the dots on some truly fascinating shifts shaping our world right now.
And our source material for today's Deep Dive is the Global Markets and Geopolitical Briefing, 16th September.
That's right. And our mission is simple: give you a comprehensive yet incredibly concise understanding of the critical movements: currencies, commodities, trade, geopolitics.
We're not just reporting facts, we're helping you understand the why and maybe the what next.
Absolutely. We're about to uncover some genuinely surprising facts. Gold hitting fresh all-time highs.
Yeah, and unexpected political plays impacting global markets in ways you might not expect. What stands out to me right away is just how many moving parts there are.
And how interconnected they all are.
Okay, let's unpack this. Global market currents. Decoding currency shifts and economic signals. Kick things off with global markets. We're seeing the dollar under some, definite pressure today. The DXY, that's the US dollar index, it slid to the 96.9 handle. What's truly driving this movement, especially today?
Well, the market's collective breath is largely being held, awaiting two key pieces of U.S. economic data.
Right, the August figures.
Yeah, retail sales and industrial production. These reports are crucial because they offer fresh insights into consumer spending, manufacturing strength, vital gauges of the economy's health.
Okay.
But crucially, the two-day FOMC meeting also kicks off today.
Yes. And that always brings a palpable level of anticipation, doesn't it?
It certainly does.
And adding to that anticipation, we actually have some new clarity on the Federal Reserve's composition for this meeting, which can really influence future policy decisions, right?
Exactly. This is quite significant. An appeals court ruled Governor Cook cannot be removed.
So she can attend.
She can attend. Her presence ensures continuity, a known voice at the table. And simultaneously, nominee Miran was confirmed by the Senate.
Narrow vote, though, wasn't it? 48-47.
Very narrow. And what's important here is that such narrow margins, they often signal a potential ideological split, or maybe a shifting balance of economic philosophies within the Fed.
Like inflation control versus growth promotion.
Precisely. For you, this means assessing if the Fed's future trajectory might lean more hawkish or dovish. That directly impacts everything from interest rates to, broader market sentiment.
So a lot of eyes on the U.S. today. Okay, moving across the Atlantic, we've seen EUR/ZAD climb above 1.18. Given some of the economic headwinds in Europe, what's really supporting the common currency right now?
It's a nuanced picture. The German ZEW survey, that's a forward-looking indicator, it actually showed mixed results.
Mixed? How so?
Well, sentiment improved slightly, but current conditions deteriorated.
Okay. So what's boosting the euro then?
It found support as ECB officials reiterated that interest rates are currently in a good place. The steady messaging.
Exactly. That consistent, stable messaging from the European Central Bank helps reassure markets. It indicates they don't see an immediate need for drastic policy shifts, which lends a degree of stability, confidence to the euro.
That's a fascinating counter-trend, isn't it? While the euro finds some stability, here's where it gets really interesting to me. We're seeing yen strength today. That feels somewhat unexpected. Why now?
It's a definite standout, yeah. USD JPY is softer, trading between, 146.7 and 147.5.
And the reason?
This yen strength is largely attributed to a development in Japanese politics. The moderate Shinjiro Koizumi has entered the LDP leadership race.
And he's seen as?
Well, compared to some of his more dovish rivals, Koizumi is perceived as perhaps less inclined towards extreme monetary easing, maybe more open to an eventual normalization of policy down the line.
So a potential policy shift.
That shift in potential leadership expectations has been enough to generate some speculative yen buying. Traders are pricing in the possibility of a less accommodative monetary policy environment. Interesting. And beyond these major currencies, how are sterling, The Australian dollar and the New Zealand dollar faring in this dynamic environment. What's the narrative developing for these?
Sterling is holding fairly steady near 1.36. This comes after a broadly in-line UK jobs report.
Which showed?
Employment gains slightly above expectations, actually. This data reinforced the market's conviction that the Bank of England will likely hold rates on Thursday.
Signaling stability for now.
Right. As for the Aussie and Kiwi dollars, they're largely range-bound. Pretty quiet APAC trading session.
Any particular drivers there?
Recent commentary from the Reserve Bank of Australia confirmed inflation is nearing its target and risks are balanced. So this suggests little immediate impetus for significant policy shifts, leaving both currencies relatively stable for the moment.
Okay. And before we leave the world of currencies, let's cast an eye towards China. Their central bank sending a very deliberate signal about the yuan.
Indeed. The People's Bank of China, the PBOC, continued to set a stronger-than-expected yuan fix, 7.1027 today.
And that's not just technical.
No. It's a consistent and clear signal of managed support for their currency. Beijing is deliberately intervening to prevent excessive depreciation.
Which could trigger other problems.
Exactly. Capital outflows, import inflation, signaling economic weakness. It underscores a strategic desire for stability amid global fluctuations, even if it means sacrificing some market-driven flexibility.
Highs, delays, and geopolitical risk premiums.
These currency fluctuations, of course, have ripple effects. They touch every corner of the global economy, especially the raw materials fueling our industries. Let's shift our focus now to commodities. Seeing a truly mixed bag this morning.
We are.
Crude futures are softening a bit. WTI around $63, Brent near $67. What's taking some of the risk premium out of the market today?
The primary driver here seems to be a report that the EU's 19th sanctions package against Russia has been delayed.
Delayed. Any new date?
No new date set. This temporary easing of immediate tension around potential supply disruptions has definitely softened crude prices.
So markets see it as a pause.
Yeah, participants are interpreting this as a pause in escalating economic pressures on Russia, which in turn reduces that perceived short-term supply risk premium that often gets baked into oil prices.
But it's not all smooth sailing, is it? Despite that sanctions delay, the underlying risk for energy infrastructure remains, well, elevated.
Absolutely. That sanctions delay offered a temporary reprieve, maybe, but the geopolitical reality remains stark. Ukraine confirmed overnight strikes on Russia's Saratov oil refinery.
Which is a key facility.
A very key one. 140,000 barrels per day capacity. To give you some context, that's a significant amount of refining capacity. Strikes on such infrastructure can have tangible impacts on Russian fuel production, their export capabilities.
So a stark reminder.
It is. While separate from the EU sanctions, it's a stark reminder that energy infrastructure risks remain high and are very much an active part of the ongoing conflict.
So we have softening crude, but the real story, the absolute standout, is gold. It's printing fresh all-time highs, trading near $3,700 per ounce.
This isn't just a daily fluctuation, is it? Feels like a strategic reevaluation.
It's certainly a remarkable performance, and yeah, much more than a daily swing. This rally is supported by a powerful confluence of factors.
It's like the weaker dollar.
First, the weaker dollar we just discussed makes gold, priced in dollars, cheaper for international buyers. Second, and perhaps more significantly, ongoing geopolitical tensions drive investors to safe haven assets.
Gold being the classic hedge.
It is the classic hedge against uncertainty, and with so many global flashpoints, its appeal intensifies. But it's also signaling broader concerns,
Right.
about inflation, real interest rates, overall financial stability. Makes it a very attractive asset right now.
And institutions are clearly taking note, updating their long-term forecasts even. That signals strong confidence.
It does. Commerzbank, for instance, raised its year-end forecast for gold to $3,600. And they also upgraded their silver targets all the way through 2026.
This isn't just a vote of confidence in precious metals. It suggests a growing institutional belief that the underlying factors driving gold's rally dollar weakness, persistent global uncertainty, perhaps even central bank buying these aren't temporary blips.
More like structural shifts.
That's what it suggests. Structural shifts that will continue to play out over the medium term. For you, this means assessing if your portfolio adequately hedges against ongoing market volatility and potential long-term inflationary pressures.
That's a critical point for our listeners. And an intriguing development from Asia regarding gold, but from a national financial stability perspective.
Yes, the Bank of Thailand confirmed discussions around taxing gold trades.
Taxing gold trades, why?
To help stabilize the baht, apparently. And they're also exploring measures to support dollar-denominated gold transactions. This highlights gold's increasing role, not just as an investment, but as a component of national financial stability and currency management.
So governments are worried about speculative flows.
Clearly. Or the impact of large gold trades on their domestic currency. They're looking for ways to manage that influence to maintain economic equilibrium.
So even as crude sees a temporary diff, gold is surging, reinforcing its role as a global barometer of stability. What about copper prices? Are they reflecting the broader market sentiment, or is there an underlying story there?
Copper prices are slightly softer, despite the dollar weakness we've discussed.
It's still holding.
However, 3-month LME copper, that's the London Metal Exchange benchmark, is still holding above the psychologically important $10,000 level.
Which indicates
It's an underlying resilience, likely driven by robust long-term demand outlooks. Think electrification, renewable energy projects. Even as short-term industrial demand is facing some headwinds. 3. Trade landscape. U.S. decisions, stalled talks, and China's stimulus.
Beyond the intricate dance of currencies and commodities, trade decisions are always critical in shaping the global economic outlook. On that front, President Trump has made some interesting statements regarding TikTok and ongoing tariff discussions. What's the latest?
Well, he remains undecided on a TikTok ownership stake. So that keeps the company's future in the U.S. somewhat uncertain.
Right.
More significantly, he's announced he will speak directly with President Xi later this week about what he terms a significant agreement.
A significant agreement. The anticipation around that conversation must be high.
It certainly is. A key focus for trade watchers. It could signal a major shift or de-escalation in U.S.-China trade relations, maybe even a precursor to a new bilateral trade pact. Who knows?
And those persistent Section 232 duties on metals, the tariffs imposed by the U.S., often citing national security, any movement or strategic adjustments there?
We are seeing some. U.S. negotiators have opened an inclusion window for derivative steel and aluminum products under Section 232 duties.
So not removing tariffs, but...
Not removing them, no. It's a mechanism for specific products to potentially be exempted. This move keeps pressure on trade partners, indicates a continued strategic approach to metal imports, and shows the U.S. is willing to use tariffs as a lever in broader trade discussions.
But not all trade dialogues are moving forward, are they? Dialogue between the UK and US on metals tariffs appears to be stalled.
Yes, it seems there's a definite impasse there. With no meeting currently planned between Chancellor Reeves and Treasury Secretary Bessent, well, it suggests a lack of progress, or even a pause in those particular trade discussions.
And that could have broader implications.
It could. This bilateral tension, or at least lack of resolution, could impact future trade agreements and the overall economic relationship between the two nations.
So, against this backdrop of global trade complexities, what does this all mean for China's economy, which has certainly been facing some headwinds? How are they trying to shore up their own domestic situation?
China has clearly recognized the need to boost internal demand. They've announced a fresh package of measures aimed squarely at stimulating domestic consumption.
What kind of measures?
Things like promoting credit support to encourage spending, expanding pilot programs in key sectors like telecoms, medicine, education.
And even practical things.
Yeah, extending operating hours for tourist and cultural venues to encourage leisure spending. All these efforts are clearly aimed at supporting demand and countering a slowing economic backdrop. It signals Beijing's shift towards fostering more internal drivers for growth. 4. Global flashpoints. Escalating geopolitical tensions.
But the most profound impacts often come from global flashpoints, and geopolitical tensions are certainly flaring on several fronts. Let's start in the Middle East, where the situation remains incredibly tense.
Indeed. Israel has launched what they're calling a phased and gradual ground incursion into Gaza City. Troop numbers are set to increase in the coming days.
Phased and gradual, that wording seems significant.
It's just a controlled, incremental approach rather than an immediate, full-scale assault. But it unequivocally marks a serious escalation in the conflict, profound implications for the region and its people.
And President Trump has weighed in on the situation with some strong statements.
He has. He stated that Israel would not attack Qatar, offering a measure of reassurance, perhaps, in a volatile region.
And warnings, too.
Yes. A very strong warning to Hamas, demanding the immediate release of hostages and cautioning against their use as human shields.
Meanwhile, diplomacy is still being attempted.
Secretary of State Rubio is traveling to Qatar. Hopes of reviving Gaza mediation efforts. He noted there's only a short window for a deal.
Okay.
And interestingly, he also hinted at an imminent defense cooperation agreement between Washington and Doha.
A defense agreement now.
Yes. This suggests the U.S. is actively seeking to strengthen strategic alliances and potentially leverage that new agreement to exert influence in the mediation process.
Meanwhile, security concerns are acutely felt in Europe. For instance, cybersecurity, a major concern for Poland.
It's a critical front. The Polish government is raising its cybersecurity budget to a record €1 billion.
€1 billion? That's significant.
It is, and it comes after Russian-linked sabotage attempts specifically targeted vital infrastructure, hospitals, water networks.
So cyber warfare as a direct threat.
Exactly. Not just a nuisance, but a direct threat to national security and essential services. It's forcing nations to dramatically increase their defensive capabilities.
And as part of broader European security, the UK is stepping up its role in NATO's eastern defense.
That's right. The UK confirmed that RAF Typhoons will soon begin air defense missions over Poland. It's part of NATO's Eastern Sentry mission.
What's the message there?
It's a clear signal of solidarity and commitment to collective security, strengthening deterrence on the alliance's eastern flank, sending a strong message of readiness and reassurance to NATO members bordering Russia and Belarus.
And sadly, the conflict in Ukraine remains relentless. Attacks on critical infrastructure continuing.
It does. Russia said its drones struck a Ukrainian gas distribution station, and they confirmed fresh attacks on energy infrastructure.
Underscoring the intensity.
It underscores the continued intensity and strategic targeting in the conflict, aiming to degrade Ukraine's ability to maintain essential services, especially as colder weather approaches, and putting sustained pressure on their economy and morale.
Finally, in Asia, Japan is signaling its commitment to G7 coordination against Russia, but with a nuanced approach.
Yes. Japan reiterated its commitment to WTO compliance, so they're balancing their international trade obligations.
But also coordinating.
But they also signaled a willingness to coordinate with G7 partners on tightening measures against Russia. This reflects a shared interest in limiting Moscow's oil revenue flows, which are vital for funding its war efforts.
A delicate balancing act for Japan.
It is a delicate balancing act, but it signals their commitment to aligning with broader international efforts to pressure Russia while still navigating their own economic and trade interests. Outro.
Wow, what a deep dive into today's global events. We've seen everything from the subtle pressures on global currencies and gold hitting those unprecedented highs.
Right, to intricate trade negotiations and escalating geopolitical flashpoints around the world.
It really makes you appreciate the complexity, doesn't it?
It truly does. What's fascinating here is the undeniable interconnectedness of it all. A delay in sanctions impacts crude prices. Geopolitical tensions fuel gold's rise. A political shift in Japan moves the yen.
Understanding those connections.
Seeing how seemingly disparate events ripple through the global system. That's precisely how you move from being merely informed to truly understanding the bigger picture and what it means for you.
And that raises an important question for you to consider. Given that hinted-at imminent defense cooperation agreement between Washington and Doha, what further shifts might we see?
Yeah, not just in Middle East mediation efforts, but potentially in global energy dynamics or diplomatic alliances in the coming days.
What ripple effects might you foresee from that particular development? Something to mull over until our next deep dive.
Definitely food for thought.
Thanks for joining us for this deep dive.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.